Welcome to our YouTube channel, where we dive deep into asset protection and real estate investing. This comprehensive guide aims to provide valuable insights and strategies to help investors safeguard their assets and maximize their real estate investments. Whether you're a seasoned investor or just starting out, understanding asset protection and real estate can significantly impact your financial success and security. The agenda for today includes a discussion of asset protection and its importance for investors. Common risks and threats to assets. Strategies for asset protection. Importance and integration of asset protection with real estate investing. Insurance and risk management. Asset protection strategies for real estate investors. Asset protection refers to the set of strategies and measures undertaken by individuals or businesses to safeguard their assets. Asset protection involves taking proactive steps to shield personal and business assets from legal claims, lawsuits, bankruptcy, creditor actions, divorce settlements, and other unforeseen circumstances that could lead to financial loss. Asset protection is particularly important for investors due to the nature of their activities. Investors often accumulate significant assets, including real estate properties, stocks, bonds, business entities, and other valuable holdings. These assets are exposed to various risks, such as litigation, economic downturns, market volatility, and personal liabilities. The key reasons why asset protection is crucial for investors includes wealth preservation, to safeguard the accumulated wealth of investors and minimize the risk of losing their assets to lawsuits, claims, business interruptions, or unforeseen events. Risk mitigation means segregating and protecting assets from potential liabilities such as legal actions or financial setbacks. Lawsuit protection, to deter potential litigants, because asset protection strategies provide a layer of complexity and barriers to accessing an investor's assets. Business and personal liability protection, to separate business and personal assets, limiting the exposure of personal wealth to risks associated with business activities. Estate planning, because asset protection is integral to estate planning, ensuring that assets are preserved and efficiently transferred to beneficiaries while minimizing potential estate taxes and claims. And finally, to provide peace of mind to investors, knowing that their assets are shielded and their financial well-being is safeguarded. As a result, investors need to shield personal and business assets from those risks by taking measures and strategies to protect their assets. Some suggested strategies to shield personal and business assets include legal separation and asset segregation. To structure personal and business assets separately, including bank accounts. It is recommended to establish distinct legal entities for business operations and personal assets, such as forming a limited liability company, LLC, a corporation, and/or a trust. This separation helps safeguard personal wealth from potential risks associated with the business, such as lawsuits or business debts. The limited liability protection, or LLC, provide protection, meaning that the entity's owners or shareholders are generally not personally liable for the debts or liabilities of the business. Their personal assets are shielded, and their liability is limited to the amount they have invested in the business. This protection helps prevent personal assets from being at risk in case the business faces financial or legal challenges. Insurance coverage is another consideration for asset protection for property insurance, liability insurance, or umbrella policies for financial protection of property damage, accidents, or legal claims. Investors can shield their assets from potential financial losses by transferring the risk to an insurance company. Estate planning is another strategy for shielding personal assets and ensuring their smooth transfer to heirs or beneficiaries. Strategies like trusts, wills, and powers of attorney can help protect assets from probate, estate taxes, and potential challenges. By structuring the estate plan effectively, investors can safeguard their assets for future generations. Compliance with financial regulations, commitments, and laws is essential for asset protection. By maintaining proper financial record keeping, well-documented records of income, expenses, investments, and transactions, fulfilling tax obligations, and complying with relevant laws, investors can mitigate the risk of legal action or financial penalties that could impact their assets. Effective tax planning is a financial aspect of asset protection. By optimizing tax strategies and utilizing legitimate deductions and credits, investors can minimize their tax liabilities, preserve wealth, and allocate resources strategically. In summary, asset protection encompasses both legal and financial aspects. Hence, it is important to note that asset protection strategies should always be implemented within the boundaries of the law. Real estate investing offers several advantages, such as cash flow, particularly rental properties. Appreciation as the increase in the market value of a property. Tax benefits and leverage to reduce overall tax liabilities such as depreciation, mortgage interest deduction, 1031 exchange to defer capital gains taxes by reinvesting the proceeds from the sale of one property into another similar property, and other deductible expenses. Equity building main overtime to the mortgage payments that can be leveraged for future investments or accessed through refinancing or selling the property. Hedge against inflation to maintain purchasing power as the value of the property allows increasing the rents. And portfolio diversification. Despite these advantages, real estate investing also involves risks that require asset protection. Some risks that investors are exposed to include litigation and lawsuits from tenants, contractors, or third parties. Hence, the importance of separating personal and business assets with limited liability companies LLC. Other risks are property damage, accidents, or injuries occurring on the property. These incidents can lead to costly liability claims. Hence, the importance of insurance. Also, the risks of economic downturns and market volatility, in which the property value may decline, rental demand decrease, and cash flow can be negatively impacted. Hence, the importance of financial strategies with cash reserves and diversified portfolios. Financing risks and mortgage defaults also can affect real estate investments. These are associated with unforeseen circumstances such as job loss or changes in interest rates. Hence, it is important to monitor interest rates and craft the mentioned financial strategies with cash reserves, diversification, and asset separation. In summary, real estate investments carry inherent risks, including litigation, property damage, economic downturns, financing risks, and estate planning complexities. Asset protection strategies play a vital role in mitigating these risks by separating personal and business assets, obtaining insurance coverage, diversifying investments, maintaining financial buffers, and implementing effective estate planning measures. Prioritizing asset protection allows real estate investors to secure their investments, protect their personal assets, and preserve their wealth over the long term. One specific strategy for asset preservation and estate planning includes separating the real estate projects with different LLCs, all grounded in a holding company. Additionally, a trust is part of the real estate asset protection strategy to ensure the orderly transfer of real estate assets to heirs or beneficiaries and minimize estate taxes and potential probate issues. Hence, proper structuring of LLCs and/or land trusts allows for a clear separation between personal assets and real estate investments. This separation limits personal liability and protects personal assets from potential lawsuits or claims arising from real estate activities. In the event of a legal dispute or financial obligation related to the real estate assets, creditors typically have recourse only to the assets held within the specific entity or trust, rather than the investor's personal assets. It's important to note that these legal structures' effectiveness and specific advantages may vary depending on the jurisdiction and individual circumstances. Therefore, consulting with a qualified attorney or tax professional is recommended to determine the most appropriate structure for protecting real estate assets and to ensure compliance with local laws and regulations. So, build a reputable team including an attorney, real estate broker, insurance professional, and CPA. In conclusion, by combining asset protection strategies with real estate investing, investors can significantly enhance their financial security and protect their hard-earned assets. Thank you for watching. Please, do not forget to subscribe to our YouTube channel and follow us on our social networks.